Okay, I think I got that right. Can you guys hear me okay? Yep, perfect. Okay, fantastic. So we're just going to talk, as always with this kind of stuff, I always like to talk about things like, it's a combination of things. It's like, yep, we got a live event, coming up this weekend. I always like to tell people about it for people that are interested in coming. But the main thing is just kind of going through and, look, the market's changing here, and just kind of talking about that, just kind of showing some, I don't know if the right term is tips and tricks and things like that, but really it's just knowledge from, folks that have kind of been there before. And, I always joke, at least in my life, for anything that I've been, I could either, if I go down and try to figure it out myself, I usually can figure it out. It just takes a long time. Or if I ask for help, it's a lot faster. So anyway, that's in the spirit of that. That's what we're kind of looking at. So, yeah, and so the first slide you should see is I just saying like how to stay flexible and trade successfully in all market conditions. And I kind of I never have actually personally done this, but that would be a good way to kind of stay in shape and trade. But I thought it was a cool graphic. So which strategies for which market conditions? All right, so it's great to have a group of strategies to utilize. And if you've been with us for a couple of years, we've gone through some great strategies that have just kind of been born out of taking deep dives into the market. And the more you kind of understand something, the more you can create something to make and that whole process kind of begets like, oh, wow, and then if we add this and if we add this. And so we've got a lot of great tools kind of in the toolbox. And so it really begs the question is, like, what is the right time and what is the appropriate time to use these tools? If you've got a nice uptrending market, it's like, okay, great, there's a squeeze buy, okay, or we're pulling back to some fib clusters. If you've got a, kind of a choppy market with some momentum, cool, 10x bars, great for day trading, right? But it's critical for consistency to understand which strategies work best in what market conditions, also just from a swing perspective, right? If you don't, then what happens a lot of times is you turn into toast, okay, which is not fun. And, again, this is something where for people, if you've been through this kind of a market before, it's not as big of a deal, but if you haven't, it can be a shock to the system, and obviously the goal is to prevent that, right? So, and we're not going to spend, I've got 2 slides on kind of big picture stuff. Last week I talked about big picture stuff, and I don't want to really spend much time on that. But one thing to keep in mind is that the markets are always ebbing and flowing, driven by the relationship between GDP growth and interest rates, and not included in this is inflation. Okay, and so if you think about this, and typically this is about a 4-year cycle, although that's been elongated now. So when GDP growth is slowing, okay, you can see like, okay, that's actually when you want to buy high multiple stocks like Google, Yahoo, and stuff like that. And then when GDP is expanding, that's more when you start looking at at the point when it gets to GDP is 3%, that's when the Fed begins tightening rates, and that's when you want to start selling like housing stocks and things like that. All right, so it's just a natural cycle, and it's good to be aware of it because there's some of that going on right now. One of the biggest things going on right now, of course, is the consumer stocks, which we'll take a look at. So, in addition to being driven by the standard business cycle, okay, what's going on right now, and again, it's typically a 4-year cycle, and you guys will hear me talking about the transports, but the transports are first movers, okay, because as business picks up, the transportation sector gets it first. They're getting the money first, right? So early expansion is there, technology is next, and then we go into services, capital goods, basic materials, and energy. All right, and then as the short-term interest rates start to rise, okay, then you see stock prices start to fall, commodity prices start to fall. What's unique right now, and what's a paradox, is we're not seeing GDP decreases, okay? We're not seeing property values fall. We're not. However, consumer staples are falling off a cliff, okay? So we've got it's a paradox that we've got right now, and the lack of understanding of this can really be nasty. And so even though, and I always like to emphasize on this, that even though you don't need to actually fully understand all this, but if you just get a vague idea of what's going on, it's like, oh, okay, well, that's why these different things are happening. And you can at least change your trading style accordingly. Again, you don't need to know the big picture, but you still, at the end of the day, it's like, okay, can I extract cash, on a weekly or monthly basis from the markets? And at the end of the day, that's all I wanted to do, okay? So, all right, so from there, right now, we have paradoxes in the market that are actually not seen in a couple of decades. So if you haven't been trading for a couple of decades, the market conditions right now are something that you just might not have experienced. I've experienced this stuff, but it was also when I was first starting out. So it was kind of more like, getting teeth kicked in, and it's like, oh my God, what's going on? And then of course, after the fact, it's like, oh, then comes understanding. So it's, it's while seeing it now, it's like, oh yeah, remember when this happened and this happened, okay. So it's not a normal business cycle. And the big question here is just simply, are you prepared, right? Because this impacts which sectors are going to get money flow. So for example, any signs of early economic contraction, all right, typically align with rising interest rates, and big selling in consumer staples. So what are we seeing right now? We're seeing rising interest rates, okay, and rising inflation rates, the highest levels we've seen since 2005. And although we don't have an economic contraction right now, we do see the stock market already starting to price this in. Okay, and if you don't, because a lot of times interest rates we take for granted. It's like interest rates are low. Interest rates since June of 2016 are up over 100. They've gone from like 1.4% on the 10-year note to almost. Mind that that's actually a big deal in terms of a lot of that stuff. If a lot of times it's like, what, it's not a big deal if you think about credit card rates and things like that too. It impacts the bottom line. So what's happening here is that the first mover has been consumer staples, okay? And you don't think like, oh, consumer staples aren't that big of a deal. And this is a weekly chart. You can see the weekly low from mid-2015, all right? That trend has been broken, all right? A 3-year trend has been broken. We're on a weekly perspective. We've taken out the 382, all right? We've taken out that retracement here. So we're still in what I would call neutral to bullish territory. But if we enter this death zone here between the 50 and the 618, things get really dicey really fast. So for the market to hold, for the market to stay in good shape, XLP needs to hold this 50% level and bounce. If it doesn't, okay, things could get really nasty really fast. And guess what? If the whole thing with the trade wars escalates, that's what's going to happen. All right, so we've got to, the whole thing with the trade wars is that, all right, is just a bluff as a negotiating tactic, or is this something that's going to be for real? And if it's for real, I mean, essentially, this sector will tell us we're going to see this thing fall very hard, very fast. Okay. The other thing to keep in mind here is that when you do have that kind of a situation, these setups are different. The strategies are different. Now, I've talked about in the past, like, gosh, mid-level RAF buys and sells. If I see a squeeze and a mid-level buy, that's like one of my favorite setups, boom. On the other hand, and again, not having seen a market like this, if you have a rally, okay, and you've got red 10x bars and you get a mid-level sell, that's a death sign. Okay, that's signing that market's death warrant. And in this kind of environment, you've got to pay attention to that. Okay, that's when you get the rollover and die, because in a stronger market and you get a sell signal, it just means the market's going to stop rallying for a while and catch its breath. Okay, does that make sense? So that's the kind of stuff that we just got to be aware of in this market. All right, the strategies change based on the market dynamics, and little nuances like that can actually make a big difference. Whereas before, a mid-level sell, it's like, I'm not going to pay attention to that by itself. In this environment, when you have a situation where, especially like this, where it's like, man, this thing is making a higher low, the momentum's staying negative, via the 10x bars, and we get a mid-level sell, it's the same as, a stock cannot escape that in this environment, all right? So it's things like that that it's just good to be aware of. So why make the adjustment? At the end of the day, I mean, there's no one strategy that works all the time. So I do work, there's an algo, kind of a machine learning firm here in Austin, and I've been doing some work with them in terms of setting up some mechanical systems. And it's been a fascinating process, because what happens is that the traders there have all decided to, for the most part, they trade purely mechanically. 10 systems that they run simultaneously. And what they do is they have all these great measurements. It's like, okay, 75% success rate and a 1.2 Sharpe ratio, if you guys are familiar with that. And as long as those stats hold true, they'll run the system. But what they've found is that if these start to, if these don't hold true, like after like a week or so, they just shut it off. Now, since they're running 10, they may shut off number 3, all right? And it's great because on something like that, they've got specific stats. And they can sit there and say immediately, like, wow, if the market, is behaving in the way that I expect, then this strategy is going to have a 75% success rate with a 1.2 Sharpe ratio, right? And if that starts to change, it means the market is not acting as I expect. Therefore, I've got to shut off this system. Now, if you're trading discretionarily, it gets a little different because emotions get involved. It's like, man, in January, I was doing this strategy and it worked great, so I'm going to keep doing it, all right? Because in the past, when I've done it, it's worked amazing. And it's totally different. So the advantage, in this case, of using mechanically based systems is that they've spit out that raw data that can allow you to change quickly. As a discretionary trader, it's more just understanding where we are kind of in the business cycle, what the stock market is doing, and then what are the best strategies, okay, to apply to that. Now, I like discretionary trading because as a discretionary trader, you can pick up nuances that machines can't. The benefit of the machines is they're not emotional, and they are going to be, not get married to anything in particular. So there's an advantage of using both, which I appreciate. So some of the times I'll get signals like that now more and more this year, and hopefully my plan is by maybe end of Q2, I'm going to start running some of these purely mechanically and kind of doing that against my own trading and see which one performs better. But the idea with that is that it's kind of like, it's interesting just to kind of watch, and it gives you better insights into the markets like that. So, if we've got a bullish market, great. Our focus is going to be, squeezes and RAF buys, right? But as the market enters a more complex paradoxes that we're getting right now, the changes are more subtle. So we have, and here's the thing, because on any given day, and you guys know this, I mean, I look at 6 monitors. I used to look at 8. I used to look at 821s. Now I look at 624s, 24-inch monitors. But you can only process so much data. And so it's what I talk about here is the 80-20 rule. So a lot of times 80% of your profits come from 20% of your trades. 80% of, or in vice versa, 20% of the things that you watch actually generate 80% of your signals. Okay, so you can't watch everything that's going on in the market, but you can key in on the things that matter. So hey, bullish market, great. I'm going to focus on squeeze and RAFs. So the key right now is to zone in and learn which of those items are important now. We have to know what is worth our attention, what's going to be driving our decisions, and what's going to be more reflective of the market. Okay, now some of this is going to be determined by what I would just call sentiment indicators, such as the combined equity index put call ratio, if you guys are familiar with that. So there's like 10 strategies with the put call ratio, but here's 3 of them. So if you got a situation like this, okay, point number 1, you've got a rising market with a low put call ratio. Here, the checklist that I have just from doing this for a while is you cut trading size in half, focus on selling put credit spreads and buying call debit spreads with smaller targets, and absolutely have hedges on. Okay, why? Well, just because it's low, okay, it doesn't mean it's going to roll over and die, but the odds have increased quickly for a quote unquote out of the blue sell-off. So okay, we're going, and then puke. Okay. On the other hand, number 2 If you've got a falling market with a high put-call ratio, it's different. So right here, it's like, man, I am so bearish right now, I'm going to short the world here. Okay, and in that case, you know, the market is an equal opportunity dream killer. So in that case, if you've got a falling market with a high put call ratio, at that point, it's like at least cover your shorts if you're short, or add long hedges. Okay, so right now with current market conditions, the amount of straight out long calls you want to have should be either low and or offset with hedges based on scenario number 3, which is we're in right now. So right now we've got a falling market. Okay, so falling market. All right, here we had a falling market with a put call ratio at 1. Here we have a falling market with a neutral put call ratio. That means that is certainly open to further gains. Okay, and you've got to understand the strategy to do in that particular situation too. And again, you don't need all that economic cycle stuff that I was talking about. Look, it's fine to know it, it's fine to understand it, but this is where the money is made, is understanding the psychological makeup of the market, and then from there extrapolating. It's like, okay, based on that, then we need to do this, this, and this. The other thing to keep in mind here too, and I'm a big fan of, and this happens quite a bit, and this doesn't happen during an expansion period where the market just keeps going up. But there's these 40-day cycles in the Dow, okay, and in Bitcoin, where you get these 40-day, 180-degree, and 120-degree cycles. And in this kind of market, so you can see here like mid-March of 17, mid-July 17, mid-November 17, you know, blah, 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 blah. These cycles actually start running harder and harder, and you want to understand kind of these natural ebbs and flows and cycles that come to the market. And in this kind of environment, the cycles dominate. Okay, when you have an expansion period, the markets just go up, you buy the dip. In this kind of environment, these natural ebbs and flows and cycles dominate the market, and it's good to understand what they are. Okay, so so what are some examples of some trades to do in those scenarios? And actually, you know, and before here, let me I'll pause this real quick too, and then I'm going to look at a couple of charts here. So if we look at, and by the way, for tomorrow, people are asking like, okay, well, gosh, what do we do? You know, what do we do for tomorrow? But today, we've got a unique situation for today, because the trend closed at over 2. All right, so here's just real quick, the kind of the trend plan for tomorrow. The trend closed over 2. All right, that does not happen very often. Now, when this does happen, there is a 90% chance that we're going to bounce the next day. The best scenario the next day for the markets is that the markets gap lower. All right, put call ratio goes over 1. And then we can start to watch this and see if this 5-period moving average can stay above 0. And in that case, we actually have the opportunity for a decent rally tomorrow. So for those of you that are in the room and you like I've got that long straddle on XLF, oh, I had an awesome day today. So tomorrow, if we gap down, that's great. But because of the high trend reading today, I'll be looking to probably take profits on that in the morning. Okay, so that's things like that we want to keep an eye on. And then from there, and if we look at the S&Ps here, and you can see they're down 9 points after hours. The problem here for the S&Ps and for the market, and again, we got that high trend reading over 2, right? But the squeeze is fired short. Typically, that's an 8 to 10 bar, i.e. 8 to 10 day run, okay? And then from there, so with the high trend reading, I think we could get a very violent rally back up to this declining 8 EMA, but the odds are actually pretty high for a retest of the low and potentially taking it out, all right? So kind of keeping that in mind as well. Yeah, and if we get timing for a low and a couple of day bounce, it's perfect. Now, what could save this market is the NASDAQ. Now, the NASDAQ has gone from bullish to neutral. Even with today's nastiness, it's not bearish technically yet. So above the 618 right here, all right, that's bullish. If you're in between the 618 and the 50, that's bearish, or sorry, neutral. And then below that is bearish. So tomorrow will be an important day. I think that we will bounce tomorrow with that high trend, but I've got to tell you guys, and this is a situation that we have not seen since late August of 2015, if tomorrow is a big down day, that's about the equivalent, or of course more than today, then the odds of a limit down crash on Monday increase exponentially. Okay, so we got to keep that in mind for our plan positions for the weekend. So this is not a time to be a deer in the headlights. This is a time to have strategies that can work in these kind of environments, and that you know what to do. So you're not, you don't want to be in a situation going like, oh my God, I don't know what to do here, right? If you got the right tools, you can actually just sit there and just move with this, and it's not quite as scary as all that. So if we come back here now and we take a look at Roku. Okay, so Roku was a trade that we did in February when the market was crashing, right? But it met our criteria. We were in scenario number 2 with the put-call ratio. What was it doing? It was down, or the put-call ratio had risen to over 1, right? Well, I didn't really want to do a market-sensitive stock, so for Roku, we had a high put-call ratio in the market, okay, looking for a bounce. We had an earnings run, okay, so we had some edge there, what Danielle calls oomph. And it had some decent short interest. So squeeze, bought some calls before earnings. And that's the kind of stuff in this market too, where you're looking for situations that won't be as impacted by what's going on. Because the most frustrating thing is to sit there and say, man, I really like, Netflix. And Netflix would have done great had the markets rallied, okay? Roku does not care if the markets rally or not, because it's on its own trajectory. It's not pumped up into any rebalancing efforts or anything like that on the S&Ps. So on something like this, like great, it's not a huge amount, but you buy them at 820, sell them at 1250. In 4 days, make almost, a little more than 50%. Those are the kind of hits that we want to make either on the long or the short side that are not as market dependent, okay? Now, the other thing in this kind of a market, okay, is that because of the volatility and because of, I just call it the violence. I mean, the violence increases in this market. Volatility and violence. You don't have time for it to have a squeeze. Like the NASDAQ here, the last time I had it squeeze was back in December of 2017, okay? And we haven't seen a squeeze since. And we're not going to see one for a while because it's so volatile. So again, in this kind of environment, knowing what we know is that we have to switch to levels, okay? So there's different kinds of levels. We already talked about fib retracements, right? If you're familiar, fib clusters, okay? Voodoo lines. These levels make or break these markets in this environment, okay? First of all, you're not going to get the squeezes, okay? But the levels will give you, everything's going to be happening faster, and the levels tell you where the conviction is in the market, okay? So on something like this, and again, you don't have to do a lot, but you could use contracts, or you could use, in this case, I was short NASDAQ futures, or you could say buy puts on the Qs just based on levels trading, okay? And what's nice about that is there's some strategies you can do, especially with futures, but you could actually, the Qs and the spiders are liquid enough as well, is you can do a strategy, what is I call bracket trading. And bracket trading is great because you can set up like an OCO order, and then you just go to the gym. And what happens is one side is hit, the other side acts as your stop. You don't know which way it's going to go. You go to the gym and you come back. And one of my mentors taught me that, and it was great. This was so the story on this is that I had been trading for 8 years. For those of you that read my book, the Mastering the Trade book, there's a story in there called Minnesota Stupid, and I blew my trading account trying to make a down payment for a house, and then I didn't have any money to make the down payment on the house, and so I had to max out my credit cards because I didn't want my wife to find out what an idiot I was. And so that's a painful story, and it's still painful to think about it now. That was back like in 1996 or 7 or like that. So in that kind of stuff, so I took about a year off from trading then, but I decided I still wanted to trade. So I gathered another stake, and at that point, you know, I had been taking money out of the market and buying some real estate, you know, down payments and stuff like that. And the real estate market had been doing really well, so I was able to sell like a duplex and, you know, get another $30,000 trading stake. And so I asked around and said, look, I need to go sit with some mentors. Okay, this is ridiculous. I've been trading for 8 years. I make money, I lose money. I want to get consistent. And so my broker hooked me up. It's we talked and exchanged emails, and so I agreed to go to I had to fly into Atlanta, Georgia, and rent a car, drive about 2 hours, and I showed up at this farmhouse. It was a nice house. It was kind of remote. I'm like, okay, did I just get set up like, you know, Stephen King Misery or something like that? And I got there, and I'm sitting down at the kitchen, and I'm talking, and the lady that answered the door, she like looked like a school teacher. She was so nice, and she's like, well, hi, you must be John. Welcome. Can I get you a cup of coffee? And I was like, oh, sure. And we started talking, and the markets opened, or the markets were about to open, and we're talking, and I actually wasn't clear who the trader was, and I was in my mind, I was like, yeah, when is her husband or whoever the trader is going to show up? And we were talking when the market opened. She's like, John, could you be quiet for a little bit? I need to look at the monitor. And so we're sitting there on at the monitor, you know, on the counter there, and she's got a small like a TV watching CNBC with the volume turned off, and then from there she's watching the ticks, the NYSE ticks on time and sales, and then a chart of the S&Ps, and that's it. And so we're sitting there, and she says, hold on just a minute. She picks up the phone, and she orders 100 of the S&P futures. You know, I'd like to place an order, you know, and and, you know, it ended up making like 8 points on 100 contracts that day. So obviously after that, I was very intrigued with everything that she had to say. But this is a strategy that I learned from her, and it's just bracketing it, meaning that you don't get involved in direction. You just want to participate in the tide as it comes by. And so this is a strategy I like to talk about, and I'll you know, go into more detail too over the weekend, but it's very, very effective in this kind of environment. And we still talk. She's awesome. So she's the one who told me that. She's like, look, she was a broker with Merrill Lynch for 12 years. And so all her clients that lost money overtraded, traded too big for their account size, and used stops that were too small. So she just did the exact opposite. She undertraded, used stops that were too wide, and then didn't try to catch direction. She just bracketed her trades. So what a bracket means, if we go back and we look at this here, when you bracket something, it's actually really useful. And this is kind of, you know, with options, you do this with a straddle, with a long straddle. So when you bracket something here with options, you buy a call and you buy a put. That's a bracket with options. Another way to do it, and it's easier to do with futures, you can also do it with the stock, is that you look at the range and say, okay, I'm going to short, I'm going to place a sell stop here and a buy stop here, and then you go to, you know, the gym, or you go to Jamaica. Because if it breaks to the downside, guess what? Your stop loss is already there because you've got a buy stop right there, right? And so what happens here is that you're not too worried about direction, you're just catching movement. And we all know that the market maker's job is to probe new highs and probe new lows. And so that's how you take advantage of that. So anyway, that's kind of what that is, it's just a nice, simple strategy that works well in this market. So, all right, so where were we? So that's the NASDAQ futures. All right, so from there, Boeing. All right, so, you know, again, this was in February, right? February was pretty nasty. It was pretty scary. And, you know, I wish I had bet the farm buying puts on SVXY. But, you know, something like that blowing up is kind of evident after the fact. In the meantime, again, I'm looking at, wow, you know, the put call ratio is at 0.75, or is it over 1? We've got a squeeze in Boeing. Okay, Boeing's like a darling right now. And we've got stacked moving averages. So when I see something like this, the strategy here is going to be something like, okay, I'm willing to load the boat, but I'm going to do low hanging fruit target, okay? And there's different market conditions where in some market conditions you let it run, right? You got to ride that winning horse. But in other market conditions like this one, you can do bigger size and take the low hanging fruit target. All right. Otherwise, okay, obviously you could get yourself in trouble, because in lieu of a setup like that, you do nothing. All right, you do nothing. So in this kind of a situation here, it's like, all right, great. Here's Boeing. It's got everything coming together. I just want to hold this for 2 or 3 days. I'm going to take a bigger trade on this. We're buying options at $11 and $12 and $13, and just look at them to flip them out at $15. I'm not looking to double this option, right? So there's a lot of opportunities in situations like that where it's like, I call it buying options deeper in the money for $11, $12, flipping them at $14 or $15, and that's good in this kind of a market because you don't get theta decay, right? It's like owning the stock and you're just trying to catch a couple of points. And you can do this to the upside or to the downside, okay? So one other tool that I like to use here is if I'm talking about the long side, okay? And the question here, and this is probably the most difficult, is when to switch teams, okay? Especially after we've seen such a long run where every dip, okay, every dip has resolved itself to the upside, all right? And so what are some filters we can use to say, wow, this time might be different? Now, something like this, as we already talked about, that was more reflective of the put call. It was at record levels not seen for 3 years. Okay, so the put call ratio was already telling us to be very, very, very careful on the long side. The idea there that if everybody's long, okay, if everybody's long, who else is left to buy the stock? Okay, if everybody's long, the only orders out there are stop loss orders, and they're all trailed at different levels. So the first series of stops triggers the second series of stops, et cetera, et cetera. It takes a lot of energy to move a stock higher, but it only takes a lack of buying to cause stocks to sell off, all right? So it's important to keep in mind. So I'll look at things like, okay, if like the rate of change, if that's above 0, awesome, I'll buy the dip. But once the rate of change, okay, once the rate of change starts to dip below 0, you've got to switch to STFR, which is sell the freaking rally. It's just something that'll help kind of keep you on the right side of the market. Now, in these kinds of situations, again, going back to the put call, one of the biggest questions I always get is kind of like, when do you put a hedge on? Okay, when do you put a hedge on? And you can see here on this day, so I'm long AKAM, right? I'm long buff and I'm long weed, GWPH, but I've got puts on, these are all, of course, calls, on the spiders as a hedge, because then there's certain kind of environments where you have to have a hedge, right? And so I wake up and the markets are down, I'm losing $1,000, I'm losing $100 on buff, I'm losing $350, my weed profits are going up in smoke, but my spider puts are up $2,000. So my portfolio, okay, my NLV, which is net liquidating value, which is the only measure you should manage your account by, is doing fine because of the hedge, okay? And so again, just things like that, it's just kind of knowing what to do in different circumstances. And buff was another one that we did in February. Again, volatile month, right? This one was fun because we had a squeeze. It was a little hairy right here, but it was doing this on low volume, so it's like, okay, fine, let's hold on to this, and the stock has proven to do that. And then we had a nice move here. It actually hit our first target and took some profits. And then as we're sitting there wondering what to do with it, boom, it gets taken over at $40 a share. So, obviously you never know when something like that's going to happen, but one of the things I like, okay, one of the things I like about stocks that are trading for a market cap of less than $10 billion is that they I think they were purchased for $8 billion. So their market cap was like $6 billion. They got purchased for $8 billion. no one's going to buy Apple, right? But when you do trade specifically stocks with a market cap of less than 10 billion in this environment, they're not going to be as impacted by the indexes, and there is that opportunity of a fun takeover like that, which is always fun. All right, so that's pretty cool. And you can see here, and this was actually before the takeover, when the stock was trading at 35. But we put on some contracts 29 days out. When it hit the first target, took some off, and then the rest were able to unload when it got bought out at 40 bucks a share, which was awesome. All right, so the current market situation. The current market situation is a paradox. All right, we've got big moves and shakeups that are happening now, and bigger ones are brewing. Okay, and because of the uncertainty, there will be violent swings back and forth with an ultimate reckoning. Okay, the reckoning typically means that a certain percentage of traders and hedge funds out there are just going to get wiped out. At the beginning, utility funds all just got wiped out. They're gone. They don't exist anymore. All the traders that were maxed out on short volatility, like selling naked puts on SVXY, they're just done. Like they're wiped out. And that's the cycle that we're in right now, where you get too many people on one side of a trade, the exits get crowded, and you get the faceplant in progress situation. So what we want to do, though, is we don't want to be fearful of this environment. We just want to understand it. Okay, and if we understand what's going on and can change tactics appropriately, then and most importantly here, because here's the tough thing. It is so critical in this environment not to get sucked into the idea of trying to catch the next big move. Okay? That there's big moves, and when there's big moves, we can all start dreaming of big profits, and we start chasing big profits. It's the beginning of the end of our trading career. And instead, it's more about you don't want, it's not being on the wrong side. Okay, and it's not about that either. It's about understanding that you can create income in any kind of market environment if you have a full toolbox. That's supposed to be box. It looks like a full tool boy. That's a different class. But full toolbox. If you understand what's going on, okay, and you understand how to switch gears with different market conditions, then it's irrelevant what's going on in the market. Okay, it's not something that should be stressful. It's just like, oh, okay, last week I was working in a factory and I was assembling iPhones, and now I'm sewing noses on the teddy bear. It's still, as a trader, and I kind of jokingly refer it to factory work, because if you've got your trading plan in place and you know all the different tools to use, it is kind of like factory work. Sometimes you're just making different things in the factory, right? And it's really important to think of it that way and not get caught up in all the emotions and things like that. Because look, we all, as traders, we all project our hopes and dreams onto the market if we're not careful, right? And in this kind of environment, that's super dangerous. And if we just kind of go back to the basics and understand the market and then know which tools to pull out in this market, then we can just go back to, just focus on our living. Like, okay, I just want to extract money from the market. So the good news is, if you haven't seen a market like this, a lot of us here have been down this road before, all right? And the easiest way to learn is to talk to someone who has been there before. Back in, I don't know why this obscure reference just popped in my head. I was a history major and I got fascinated by different aspects of history, but one of them was when the Dutch became a navigational power and they were sending people over to Japan. Now think of how this worked. Back in the 1600s, you sailed for 2 years in a boat where a lot of your shipmates were dying of scurvy. You didn't have navigation, and the only way you could find your way there is that you had a notebook from someone else who took notes when they went there. Okay, I mean, it's insane the amount of 2 years on a boat. I mean, you think like, okay, right now I can fly to Japan in 16 hours. 2 years, so. But the idea with this, and so I guess what triggered that, is that they became more confident in taking the trip as long as they had the notebook or a copy of it from the pilot, and that's who the navigation person was, the pilot, the most important person on the boat, even above the captain. And those were trade secrets that were guarded, because if you had the notebook of someone who'd been there before, your chances of landing there, getting spices, and going back with a successful voyage increased exponentially. Okay, and it's the same here. So myself and many of the traders here, we've already seen this movie, right? It's different than the one that's been playing over the last few years. In fact, it's different than anything I've seen in 10 plus years. The good news is that meaningful than learning from experience, and that is not learning from experience. The reality of it is the ARG at the one end of the spectrum, large amounts of money moving in and out of asset classes. Okay, this can be tracked. We've talked about that before, and we're seeing money right now moving out of consumer staples at an alarming rate. Right, that's telling us something. At the other end of the spectrum, we've got a mob mentality and all the emotional and psychological traits that are associated, okay, with large groups of human beings piling into the wrong assumptions, right? And that's largely like the put-call ratio, different things like that. In between these two extremes, you have high-frequency traders and the algos taking their 2 pounds of flesh along the way, all right? And so our niche is in between all that. Plenty of room there, again, if you understand it and have the right tools. So at the end of the day, what are the keys to adapting and trading successfully in all of these different market conditions, okay? Now, hopefully here you've understood, hopefully you've understood at this point, it's so important here. Look at that put-call ratio. What's it doing? What's it telling you, right? That rate of change, there's, different tools like that you can use. But you want to just kind of, in understanding the market, the market conditions, for directional trading, when are the odds in your favor for this type of trading, okay? Because guess what? A lot of times the odds are not in favor of directional trading. When you have a long running up market, that's the best kind of market for directional trading. When you have this kind of market, it's a lot hairier, okay? Because you always the odds of waking up with egg on your face is very, very high. So your strategy has to change, all right? Income trading, understanding when the market has gone into complacent and choppy mode, okay? Now the markets are choppy right now, but they're not complacent. There's a difference. While directional trading does not work in this environment, it's perfect for income strategies. And then cycle transitions, we've talked about a few slides on that, and we'll go more into all this at our online event. These are the hardest to time directionally, okay? But they're the easiest to trade if you understand what is going on, and just simply switch strategies. Let go of what's worked in the past. Let go of anything you're emotionally attached to that's worked in the past. And I always say the best gift you can give yourself as a trader is a clean slate. There is a great book called, The Traveler's Gift, I think, if somebody is familiar with that book. I think it's called The Traveler's Gift, but it's one of those, it's very rare for me to read what I would call a self-improvement book and actually enjoy it, because a lot of them are just full of crap. This is one that you sit down, it's probably has some of the most wisdom page for page that I've read in a book in a long time. And one of the chapters was on the, how critical it is to forgive. And it's not forgive other people, but forgive yourself. And so in trading, if you make a stupid mistake, shake it off, forgive yourself, and move on. Because if you drag that emotional baggage with you into the next day, all right, it's going to impact your judgment, and it's just going to be a spiral that is not good. Oh, you've got that one, Andrew? Awesome. Andy Andrews, yes. Yeah, it's a great book. It's a great book. So anyway, just things like that we want to be aware of. So knowledge is power. And one thing that's I've learned, at least over the years, is the lack of knowledge is super expensive. So along the way in my own trading journey, I have had to figure things out on my own and ask for help. And again, asking for help is always the easier, faster, and least expensive solution. So we typically limit our classes. For those of you that have participated in our classes, it's typically limited to one concept and one trader. Danielle did a great class a couple of weeks ago where she focused on kind of like, okay, here's my strategies, and it was awesome. Now, our live events are meant as an opportunity for attendees to study with and learn from all our traders in one sitting and cross-examine them if necessary. That's actually the most fun. So instead of taking 10 classes to get up to speed, this is one class with the highlights from everyone and every strategy that's appropriate for crazy market conditions we're seeing right now. It's a perfect combination for this type of market. Now, unfortunately, our live event is sold out. However, we have turned on the switch for people that would like to log in podcast online. Okay, now how does this work? And there's a lot of cool bonuses that you guys can get with this. So bonus, and a lot of this is for especially geared for people that it's like, man, I didn't even know you guys existed, and I want to get up to speed. So we've got 4 of our popular online classes on options, futures, Greeks, and Fibonacci. If you go to our store, you could buy these right now for $1,988 for all 4. These are included in this online event, okay? And in addition to this, one of the class that I've done, so when I do classes, I always ask at the end, you know, hey, here's my email, send me your aha moments. The class that got the most aha moments that I've ever done was back in, I mean, this is, gosh, 3 or 4 years ago. It was called the Elephant Trade class on how to identify rare situations with the potential. You can't actually get this on our site. We took it off. So with this workshop, you actually get a copy of that, which is fantastic. So that's kind of the main stuff there. And for those are all the classes. We've already talked about that. For some of the folks that are going to be there, I mean, if you guys are with us, you'll recognize myself, Henry, Bruce, Raghee, Carolyn, Neil, Eric, Danielle, and then Mark Chaikin's going to come in as well. And then we have a sports psychologist who's going to come in and talk about mental toughness, which I think is going to be awesome. Now it's interesting for those of you that know Danielle, and it was great because you never know the impact of these things, right? I think it's fun to put these on and have more time to talk to people. And for those of you that don't know Danielle, at one point she reached this point in her life and she's like, ugh, I'm just frustrated. And her dad was like, hey, look, I have a solution for you. You can work from home, raise your son, and be able to make enough money to get by, learn to trade options from these guys. And so she came to our live event. So Danielle said, I can trace the turning point to when I attended the Simpler Trading Mentorship in Austin with my dad. That one event sparked a revolution in my life. And I say, and so it began, which I just thought was cool. So it is very powerful when you kind of make the decision to commit to something like this. It's like, all right, I am going to commit to this. I'm going to take this knowledge and move to the next level. So it's awesome. So again, the live event sold out. It is like, I think it's $4,000 to attend the event. Someone was asking like, hey, why is the live event like $4,000 and the live stream $997? And it's obviously just the lunch. So the lunch there is really good. It's organic. It's fresh off the farm. Otherwise, it is just the same. Well, just kidding, of course. Well, what we do at the live event is we do set up some one-on-one sessions. We have poker night. We have cocktail reception. Obviously, there's cost involved, but it's like we're all there in the same bubble for 72 hours. But for those of you that would like to take advantage of this, remember with this $997, and at what's going to happen is by the I think at the time that this starts on Sunday, the price is going to go up to $14.97. So you can get it at a lower price now, early bird special. So you get the 3 days broadcast of the event that we're going to be doing Sunday, Monday, and Tuesday. We're going to be talking about strategies and doing live trading. And again, instead of one person and one strategy, you're going to have a bunch of traders all talking about and highlighting the best of the best that they do that's going to be applicable to this current market. From there, you're going to get $2,500 worth of classes that we've already done that are also very applicable to this market. So I think it's going to be awesome. This is the kind of thing where, you know, you can get, I always say as a trader, you know, you're not going to ever mimic someone exactly. As a trader, you want to be in a situation where you can take the things that best fit your personality, that best make sense to you, and make them your own. And this is a rare opportunity when you have kind of everybody coming together and sharing the best of what they know to put together a trading plan that can, you know, change your life pretty much. So that's what I got. Obviously tomorrow is going to be kind of crazy in the markets. And again, keep in mind that with that high trend 2.0 reading, and I'll be sharing some other kind of tips like that with you guys during this 3 days, what to keep an eye out for tomorrow. And I think this event's going to be great. The timing for it couldn't be better. I love it. It's going to be a fun, meeting everybody live, and then of course for the people participating online, I think it's going to be a lot of fun as well. Okay. Question from Deb: are you going to have webcams on the speakers? By the way, I really like the webcam on your premium video. Oh, well, so I did the webcam last night because I wanted to try it. So I'll probably do that again in like 30 days. But it's certainly, it's a lot, probably a little distracting. We are there. So we are, the way this is going to be set up, and Darrell, if I'm wrong on this, let me know. You'll be able to see the screen that we're sharing, and there'll be a camera so you can actually see us live as well. So I believe that's how, so you can choose, you can kind of go back and forth between the two. And then of course, we'll send you copies of all the presentations and things like that too. When will you have another live in-person mentorship? I'm not sure yet. I don't think we have one on the calendar. I'd actually like to do one again. So we used to do these back and forth between Austin and Las Vegas. And in Las Vegas, we go to the Mandarin Oriental. And although the room in Austin is better, Las Vegas is more fun. So we may try that, but we don't have one on the calendar right now. We just do like live events like twice a year, once or twice a year. Yeah, New York City would be awesome. Will all the live stream presentations be recorded and sent to those who paid for the live stream? Yes. So certainly you would have a recording of everything that was done as well. Just out of curiosity, if we were to do another live event, I'm with you, Jonathan, on the Grand Caymans. What cities, like, I should do a poll. What cities do you think would be good? San Fran, Chicago, New York, Aston, Washington, D.C., Honolulu, San Diego, Phoenix. I'm down for Sydney. Dubai, that would be awesome. That's on my list of cities I'd like to go to. I've never been there. I love Seattle too. Seattle in August would be great. Amsterdam, So I studied abroad in England for a year, and I think I went to Amsterdam 12 times. It was a pretty fun city. Yeah, and that's a big part of the course. What we're talking about is just kind of different things like that, rules and setups and things like that too. Yeah, Austin right now is beautiful. So the weather right now is perfect. That's Ford Prefect. That's awesome. East, do I do any personal mentorship? So you know what? I actually used to. So what I would do is once a quarter, limit it to 5 people and do like 4 days of kind of one-on-one. And it's harder to do these days. We may look at that again. It's just difficult to do. There's just there's so much stuff going on in the market and the room and all that kind of stuff. But it may be something that we do again. That's true. Always Skype. In Seattle too. Yeah. Thing with this kind of stuff too, and I always say, like, don't fear the unknown with the market. It's just focus on the risk of the unknown, right? Thoughts on credit spreads with out-of-the-money options in this environment? I actually, selling credit spreads in this environment like that, Matt, I don't actually like. If we're talking the same thing here, just because we're having greater than expected moves. So a greater than expected move can clip those. Actually, I like the idea here, because I don't do this very much, but buying like 1.5 standard deviation iron condors. So you're risking a small amount for a potentially large reward instead of having a potentially small reward selling those things for a potentially huge loss. Oh, yeah. Yeah, I think out of money options is protection. So if you have, like, say, calls, 3 long calls on some stocks in this environment, you've got to have a hedge. Out of the money puts on the spiders are good. It's a day like today is a perfect example of that. He's done with the swamps. AR, so I do like buying options on stocks before they release earnings, but if they have like some weird kind of a situation, instead of doing it directionally, I'd buy a straddle. So Facebook would qualify for that. Yep, for sure. Yeah. So anyway, I mean, this is going to be a great event. So like I said, in this kind of environment, I mean, the guy, the timing is perfect. Um, I, I think what's nice about this is just kind of like, the idea here. It's not to spend 12 hours on one concept. It's to have 10 people spending 1 hour on this is what's working, and then doing live trading with it. So it's just a great summary. Do I expect volatility to continue for several months? I do. Yeah, I'm not. Here's the thing. I mean, the last time we've seen volatility like this was 3 years ago, and that volatility itself to the upside, of course, and the market's made new highs. And so the question here is, if and when is that going to happen again? Oh, okay, this is just going to resolve itself to the upside. There's things that are happening right now that are just a lot different than then. And so you just don't want to assume that's going to happen. You want to be ready for anything. And that's what I mean by just changing strategies. Instead of buying the dip, it's like, okay, let's buy some straddles, right? Let's have a balanced portfolio, liquidating value, so we don't wake up and get our teeth kicked in. At the same time, we obviously want to take advantage of bigger moves that are shaping up as well. And when the market dynamics change like this, you just got to know, like, okay, it's like a toolbox. Do you need a wrench? Do you need a screwdriver, or do you need a battle axe? And it's just understanding which tool to pull out in the situation. If the markets are going down next week, should we hold XLF into the weekend? So, Steve, my plan for XLF tomorrow is I think we're going to gap down. Because we have that 2.0 reading on the trend, there's also a chance that we could reverse and go higher. So I'm going to be watching the internals. If tomorrow that any initial bounce fails and we make a lower low in a big way and close at the lows, then we actually have a decent chance of crashing on Monday. So in that case, I would want to continue holding my long straddle on XLF and actually add a little bit more exposure to the short side. Okay, so J bottom. I'm in the middle of an aforementioned face plant. Any chance this will turn around within 30 days to previous levels? Okay, so the honest answer to that is I don't know, right? So the market is either going to go up or down. I will tell you though, so the thing here is that, right, anything can happen, right? I will tell you though that when you get into a situation where you're hoping and praying for a bounce, it's a tough situation to be in, right? For the past couple of years, waiting and kind of hoping actually has worked. And so I would just encourage you to look at it very, very realistically. Now, I mean, the good news is we got a 2.0 reading in the trend today. We do have a decent chance for a small bounce tomorrow. I don't know if a small bounce is enough to kind of help you out there and flatten you out. But yeah, I would just be very, very careful, because it's that waiting for a bounce part in a situation where you might not get a bounce that just can hurt. And here's the other thing too, and this took me a long time to learn. And the same lady that I went to and talked to in Atlanta, she said, look, John, I'm going to tell you something. And it's because I was hesitating to take a loss. She's like, what does your account balance say? And I was like, oh, it says $30,000. She's like, okay, so when you sell that and take that loss, what's it going to say? I'm like, $30,000. She's like, okay, so there is, if you're thinking about a unrealized loss or a realized loss, they're the same damn thing, because your account balance is the same. And I'm like, and it kind of hit me between the eyes. So if you think about that, on the one hand, it's like, man, if I hold on to these, they'll come back. Or you could close them out. Your balance is going to be the same as it is now, and then potentially reverse your positions and make it all back, right? Go with the flow of the market. Go with the tide of the market. So again, strategies like that in this environment are really critical. You just want to kind of understand the market, have the right tools, and then not be in situations where you're thinking, oh my God, what do I do? Right? You just calm, cool, and collected. This is the market that we're in, and this is what I'm going to do. Do we need to buy now, or will tomorrow or Saturday be sufficient for payment? I believe, I know that the price will go to $14.97, but I believe it will stay at the $9.97 up to the start time of the event. I might be wrong on that, but I think tomorrow would be fine. Yeah, Omaha's a good. I actually lived in Fremont for 2 years on a lake house. That's about. So I was a kid, but I know that was close to Omaha. Amazon. So I like Amazon because the chart's good, but guess what? It is tied to the NASDAQ. So if the NASDAQ goes, Amazon's going to go, right? The price structure of Amazon is great, but if the John, would you say this type of market is harder to try to go full time? No. Okay, so that's a great question. So I actually don't think it's harder to trade full time, but I think it's more important to be flat a lot. So if you've got a slowly trending bull market, you typically want to have exposure to the market. In this kind of environment, you actually want to be flat, I mean, either flat or light a lot of the time. Okay, so you're kind of waiting for different opportunities. Or if you do have a lot of exposure, you have what I call more balanced exposure, like long straddles in this kind of environment. Because that way it's like you don't really care which way the market goes as long as it moves a lot, right? And so you're looking for opportunities to do things like that. So, again, and slow bull markets can be frustrating because what'll happen is like, a lot of times people will buy the highs and then on the first pullback they get stopped out, right? So, I would say that a market like this is, to me, the market condition is irrelevant as long as you understand it and kind of have the right tools. Yeah, no, Jonathan, I'm actually really interested about that too. So I'm hoping by Q3 to roll out some mechanical systems. I've been definitely spending a good chunk of time on that. David K, I kind of like that. That's kind of like legging into a straddle. I mean, it's for sure. What sectors are likely to fall the most? So, well, XLP, consumer staples are leading the way down. Okay. Right behind that's going to be real estate stocks. So those are the ones that go first. And then tech is usually trailing behind. All right. Do I trade calendars? So I actually don't, although they're great. So Bruce, he does tons of calendars. He'll be at the event as well, talking about how he uses those. All right. So am I going to become an algo? Nah. That's actually a really good question. I actually never really considered machines until I was talking to a guy here in Austin who a huge big trader, and he kind of talked through ideas now being traded by machines, and he just sits there and watches them trade, and obviously can make adjustments and stuff. And it was a very insightful conversation. I was just like, oh, got it. So that's what I'm looking at. We'll see. I don't know exactly yet. I like discretionary trading. So what I'd like to do is set up like 2 mechanical systems and run them, and then have another account where I'm trading discretionarily, and then see who wins. It does. It takes the psychology out of it. It forces you to get so much clarity on what your strategy is, because the machine does not interpret nuances at all. So we shall see. Yeah, and Andrew, I've been using something. It's called Cloud Quant. So it's a little more complicated, but I've heard NinjaTrader 8's got an amazing platform as well. All right, guys. Well, thanks for joining us. And again, for those of you that are going to join us this weekend, I think this will be awesome. Again, it starts Sunday afternoon, I think at noon. If you go to simplertrading.com live stream, I've talked about everything you get with this. Great courses. This is going to be an awesome event. This is the kind of thing that can kind of make or break, what you're going to be doing for the rest of the year in the markets. Instead of one person and one strategy, you got the best of the best from 10 people. So it's a great opportunity. I like sharing this stuff. I love meeting other traders and talking to them, and it's always fun for all of us here to get together because during the day at the office, the markets are open and it's crazy busy, so it's fun for everybody. All right. Very good. All right, guys, have a fantastic evening. I'm not scheduled to be in the room tomorrow on the mic, but I will be typing in, obviously, any updates and things like that. You guys have a fantastic evening, and looking forward to working with you on Sunday.